we're going to talk about a company that I'm actually personally looking at because I think the timing is pretty perfect for things to go right, and that's Virgin Galactic. They've been in development for years now, and they are about to go to market. I want to know the product that Virgin Galactic is selling is actually worth $250,000 per seat, and I want to know what the company thinks are the risks so that I can figure out whether it's worth investing in or not. Because if I'm looking at the financials, it doesn't make much sense. But if I'm looking at it as a forward-looking business strategy, it just might, right? If this is the type of content you've been looking for, please hit the like button and let's get started. It's a piece of document companies file when they go public, and it has a wealth of information about company outlook from the leadership, the risks that they see, and also how they break down their financials. Now, I always advocate that you invest in what you're interested in because I don't want you to read a document about oil rigs when you have zero interest about oil or oil rigs, right? But if it's about high fashion, or if it's about brand new technology like Tesla, then it's a lot more interesting for you to read. To me, it's very important for you to invest this way because this way it's more likely for you to stay on top of your investments. And when we're talking about a document that's like 400 or 500 pages, even though I'm suggesting that you read 4 or 5 pages of this document, you still have to have a baseline interest. Otherwise, it's just gonna go through your head and give you zero value. Okay, so for the purpose of keeping this video nice and terse, I'm gonna do a lot of jumping around, but I'm going to show you exactly the skeleton of how I look through an S-1 document, and for Virgin Galactic, what is standing out to me, so you have an idea of how I look through it so that you can leverage it for yourself. So a lot of times you can get the S-1 from the company's own website, which I do a lot because I just search company name S-1, but the more standardized way is to go to SPCE, SPCE.gov. You just search for, Virgin Galactic. In this case, the autocomplete is pretty legit. And then they're going to have a shit ton of documents. You just search for S-1, right? And then you hit document. You go to the web page version because it's a lot easier to browse. And from here, you want to basically go to the table of content. Here, you get a pretty high level idea of what you'll be looking at. The way I learned how to read this document, I always start with the business. The key thing to be aware of here is that it's a great way to understand what they think the value prop is, how forward-looking they are, etc., etc. But you have to recognize that this is written by them, not an unbiased analyst or something like that, right? So take everything with a grain of salt, but it's a great way to get yourself acclimated to the idea of their business and whether it makes sense to you before you start looking at unbiased opinions. So here there's going to be a lot of details. Some of them are important to you in terms of market size, value proposition, but others is just like adjectives that makes it sound more exciting than it is. So ideally you want to skim it pretty quickly, read it like adjectives don't exist. And I think the best way for me to read it usually is I read the first sentence and the last sentence, just like we learn in English, because usually those are, the indication for whether I would care about the rest of the paragraph. But the first paragraph I usually read through because it's kind of the thesis, right? So right off the bat, it's saying that it's a unique multi-day transformative experience. I didn't know it was multi-day. The next sentence says that there's several minutes of weightlessness, which gives me the impression that you're only in space for several minutes. I'm wondering what you're going to be doing for the multiple days. So that's a checkpoint to look into. They will launch from Spaceport America, and that's interesting because I'm not sure what a spaceport is, so that might be an interesting checkpoint to look at. While all of this is going on, I have a Google Doc going because I want to take notes on all of these points to figure out what I need to look into later on, and also have a cohesive document that I can reference later on as well. So according to the U.S. Chamber of Commerce, by 2040, this is going to be a $1.5 trillion business. I get it's the U.S. Chamber of Commerce, but I don't know how they got to that number, and so I think that's pretty fluffy. Only 600 people have traveled above the Earth, which is irrelevant. The market opportunity has 600 reservations, $80 million worth of reservations from 600 people. And since February 2020, they have 8,000 inquiries. This makes me wonder what the top of the funnel looks like. How many people they've approached for this idea in order for them to get 8,000 reservations in the first place. And then out of the 8,000, you have 600 people who are rich enough to put down a shit ton of money to do this. Okay, because Virgin Galactic doesn't really have any real competitors other than Elon Musk, their spacecraft is, in my opinion, a waste of time to read right now. Their motor, irrelevant. Okay, I'm seeing a lot of repetition here. It keeps talking about the number of people in space, the size of the market. So the next bit I want to jump into is this our strategy section. So this gives you an idea of how they view their go-to-market strategy. And so obviously they're going to launch the commercial program. They want to expand the size of their fleet by 2023. So that's a good sign because that's only 3 years from now. So they want to expand the fleet to 5 spaceships. And this makes me wonder whether they have enough demand to run 5 spaceships. They want to lower operating costs. To build 5 spaceships, I'm not really sure if that's lowering any operating costs. Leveraging proprietary technology. So there's a lot of fluff here. If I'm truly honest, that's a lot of fluff. Okay, competitive strength is also worth looking into. Differentiated technology. Doesn't really highlight why their technology is worthwhile, just that their technology basically needs to exist and is great. So significant backlog. So this is pretty forward-looking to say that there is significant backlog and pent-up customer demand. At the end of December, they have 600 future astronauts backing $80 million. They're basically saying the same thing, right? Okay, they're highlighting their significant backlog, and you can read it as such in a way that, 600 future astronauts equals $80 million. If you get 8,000 people signing up, so you can make at least 10x $80 million in top line. But the thing is, I don't have any context in terms of how they got these 8,000 people signed up, how serious they are in space travel, and so I'm taking this with a grain of salt. Limited competition, that I agree with. Iconic brand, that I agree with. So still under the business section, there is a subsection called the astronaut's journey. This is particularly interesting for this company because they're basically describing the user experience. And from here we can see that there is a 3-day pre-flight training at spaceport. And then space flight actually occurs on the 4th day. So that explains why it's a multi-day experience, which makes sense because you got to prep people for going up, flying so fast, that kind of stuff. Most of the training is expected to involve hands-on activity with real flight hardware with high fidelity mock-ups. That sounds interesting enough, but for 3 days, I'm a little bit concerned about the actual experience. Okay, so under the section space flight experience, now I'm reading you're having, several minutes of weightlessness. The spacecraft has taken off less than 2 hours prior. Upon landing, astronauts will disembark and join the family. So this gives me the impression that out of a 4-day event, you're in the air for 2 hours. And then the space experience is a couple minutes. So now we get the crux of what $250,000 actually gets you. So now we're at the crux. So now we have an idea of what $250,000 actually gets you. Okay, so that's all I wanted to get out of the business section because this gives me an idea of how forward-looking they are thinking, for the next 2-3 years, what are they doing, what their goals are, and for $250,000, what are they getting out of it? Okay, so the next section I want to look at are risk factors. And so we go back to the table of content and hit risk factors. This gives us an idea of what they think the risks are. And usually they're pretty blunt about it, which is a great sign. Incurred significant loss since inception, may not be able to achieve and maintain profitability, which I'm expecting from a startup. Okay, so they've basically lost about $500 million in the last 3 years in terms of development, so that's okay because that's expected. So the next point is something I'm super concerned too, right? Because it's about selling the human spaceflight idea. Unless they can reduce costs significantly at $250,000 a ticket, they're basically vetting themselves out. Unless it's on your bucket list and it's the last thing you want to do, getting a loan and just saying fajita. So the status quo is basically saying that only the 1% will be able to do this. And then you have to think about, how many people they've already approached to get to this 8,000 number, getting 8,000 people signed up. If it's, 10% of the 1% that signed up, then there's a potential for you to 10x that numbers. So if we guesstimate and say that the company has approached 10% of the 1%, then perhaps you can expand that 10x and say right now we have 8,000 people who are interested out of the 10% of the 1%. We can potentially grow that to 80,000 people, and then you have about 10% of the people who are interested who actually put down a deposit, so you multiply that by 10x. So you have 80,000 people who are potentially interested in going into space, and then you have 8,000 people who are interested in actually putting down a down payment. So until they reach economy of scale where the tickets are cheaper, flight is cheaper, this is what we're seeing. These are the numbers that are going through my head. And so short term, I see $800 million best case scenario for this company to make in the next probably 2-3 years. Okay, so we keep looking at the risks. The market for commercial flight has not yet been established. Emerging market may grow slower than expected. I mean, that's basically what I was getting at, right? Anticipate commencing commercial space flight operations with a single space flight system. Inability to operate will adversely affect the business, no shit. Relying on developing technology, which has uncertainties, some outside their control. So this might be interesting. So probably more dilution. Third-party contracts for research and development. I didn't know they were leveraging third parties for research and development, but that makes sense as well. Safety performance again. So they're mentioning safety a lot, which makes sense because you're being sent into practically outer space. But looking at how space technology is advancing today, I think safety concerns is not that big of a deal. It's just a hurdle they need to get across. I'll save you the details, but the risk section is something that you should definitely not avoid. At the very least, read the outline to figure out whether you need to dive in deeper. But usually they're pretty blunt about it. So it's worth looking into, making sure that you didn't fall in love with a company that you don't fully understand. And you need to understand the pros and cons of every business you invest in. This is a great place to start. So the last section I want to jump into is this management's discussion and analysis of financial conditions and results of operations. This section gives you some additional perspective from management, which is super important. Again, I'm going to jump around here because there's a lot of repetition here, which frankly gives me a little bit of concern as well, just in the sense that they don't have anything new to add. So in this case, you basically get an emphasis from the management in terms of their concerns. Here, customer demand is number one, the availability and flight rate. So essentially per seat, how much it costs, and whether there's going to be demand for those seats, right? Those two things are super important, especially in the airline industry. So if you imagine a plane where you can only book one seat for the entire plane, the cost to operate that one seat is going to be super high. But if you can book the entire plane, then the cost will be distributed over everybody. And therefore, the cost goes down and the amount that you make goes up. And this is super, super important for anything that involves airplanes. So there are two things that are worth highlighting from this section. You get a management's perspective in terms of what they're really concerned about. The other thing that's worth highlighting in this section is that you essentially get an idea of how they break things down. So for example, under research and development, you get an idea of what they're actually doing so that you know when a shit ton of money goes to research and development, what they're going towards. And then of course you get a breakdown for 2018 to 2019 in terms of the revenue. So then when you get to the financial number, you know that research and development is the biggest expense, and $130 million is used for X, Y, and Z. Now you have clarity and transparency in terms of what you're looking at. So that's how I read the S1s. Out of a 400 or 500 page document, I focus on three sections: business, risk factors, and the management section. This gives me an idea of exactly what the company wants to do and what they think the risks are. And then lastly, it gives me an idea of how to read their financials if I want to understand the details a little bit more. This, again, is super important when you're looking at a company that just won IPO. And if you're looking at a company that's been live for a while, you want to look at their 10K because ultimately those are the updates to the S1 document, and that comes out every year. This gives you the same idea. And I recommend that, if you don't want to read this document, at the very least, read the risk factors before you put in your investment, because especially when you're falling in love with a product, there's a very high likelihood that you'll get information from these documents that you will not get from the news sources that you usually go with. There is a very high likelihood you'll get information from these documents that you will not get from other news sources. And so it's very important for you to read this to understand that in this case, for $250,000, you're actually paying for a 4-day experience, right? And that only 2 hours of it is spent in air. Do you want to go forward with this investment, or do you think that sounds ridiculous, right? If I'm just reading regular news sources, I would have never known, because news sources, they're essentially incentivized to cover the good bits. They're not incentivized to cover interesting or quirky details like this. But now that I know, I have a different opinion about this investment. So this is why it's important for you to look into these type of details, because it gives you an opportunity to fall out of love. I hope this video provided you a clear guideline in terms of how to look into S-1. Please let me know if any questions or concerns or any topics that you want me to talk about next. If you haven't done so, please hit the like button and subscribe, and I look forward to working with you next time.